Hello, welcome back, friends. And today we're going to work on a little something I call the yoga of investments. Well, just like before you go and work out, it's always nice to get in tune with your body, do a little stretching. Hopefully, you're not going to hurt yourself. And we might be considering what we're going to be doing with our stocks. Now, you may be invested in ETFs, you may be invested in single stocks, and you may be invested in cash. So depending on what you got going on in the market, if you're worried about your particular stock, I always recommend compare how your stock is doing or your ETF is doing compared to the market. Now, recently, some people have been winning, but other people have been losing in the stock market. Now, for myself, I'm a long-term investor, which means I tend to look at the 1 year and the 5 year more than I look at the 1 day or the 1 month. But we're going to take a look today at the major indexes and see how they've been performing over the 1 day, the 1 week, the 1 month, the 6 months, and the 1 year and 5 year. So if you're wondering about your own investment and how possibly may be affected in the market right now, you're thinking about whether to hold or whether to buy or whether to move to cash, you can maybe think about how it's doing relative to the market. For myself, if my stock's doing a little bit more like what the market's doing, I might be a little bit less worried. If for some reason it's doing much worse, I might want to find out why also. And then that's a whole nother discussion. If you are not an investment expert and you're looking for help, I'm most likely not your investment professional. But if you're looking for someone to become your investment professional, feel free to contact me, Max Drew, CPA out of Sacramento, California. I am a registered investment advisor and a fiduciary and would be happy to help you with your specific portfolio investment type of questions. Okay, remember, this is not investment advice today, just purely for entertainment, but we're just going to do a review on the weekly roundup. So it's Friday, April 3rd, 2026, and the Dow Jones closes at 0.13% down today. So what does that mean? Well, 0.13% means a little bit more than 1/10 of 1%. So I'm not really too worried if I had $1, if I lost less than a penny or 1/10 of 1%. So a little bit down, but basically flat for sake of argument. Let's look at the 5 days. How's it been doing over the 5 days? Market's actually up 1.13% over the 5 days, 1.31%. And that's actually good. If you think about it, if it did the same thing for 50 weeks, the market would be up 65%. Well, the market tends to go up and down. In the market, generally speaking, there will be days where you gain money, other days where you lose money. So we're going to take a look at the 5 day, 1.31%. How did that translate into the 1 month? For the Dow Jones, we are actually negative 4.12%. Well, am I worried about that? Personally, I am concerned, but I think this might reflect world events right now, especially as we've heard about the war in Iran. So I expect, hopefully we're in a temporary situation. Hopefully things pick up, turn around, and are positive over 6 months. I'm generally not going to be that worried about it. I'm not going to be thrilled and super happy, but it's not the end of the world. So for me, being a long-term investor, if I'd been in the market and owning an ETF, for example, in the Dow over 6 months, I would have been relatively flat, even though in the last month, been down 4%. Let's take a look at the 1 year. 1 year in the Dow. Actually, a lot of people think 4's good, 8%'s good, 10%'s good. Well, believe it or not, even in spite of all this bad news that we've had recently, the 1 year we've actually been up 14.7%. Amazing. So we've had an amazing year in the Dow year to date, 14.7%. So imagine you had $1,000 in the market. That means just for sitting down and doing nothing except watching the market, you would have earned almost $15,000. Well, that's a good way to make money, right? Should it always be so easy? All right. Well, that's the Dow. This is the oldest of the market indexes we've been watching, going all the way back to about 1880, and then, well, maybe a little bit longer, 1886, I believe. It's about 140 years old. So if I didn't get that exactly right, please don't hold it against me. Look it up yourself on Wikipedia, the source of all modern knowledge. Okay, so next one we're looking at is the S&P 500. A lot of people say, hey, Max, I like to diversify. Not only am I in the Dow 30, I'm also also in the S&P 500? Well, almost 30% of the S&P 500 is made up of those Dow 30 companies. So a large bit of your portfolio, if you got like 30% in the Dow and then 30% in S&P, pretty soon 60% of your portfolio is actually in the Dow one way or another. So the S&P 500 is more diverse. It does have 470 additional companies in addition to the Dow 30, but they only make up 70%, where the Dow does make up 30% of the S&P 500. Let's take a look at the 1 day. Actually, the 1 day, good news, the S&P's up 0.11%. So that means if you had $100 in the S&P, you would be up 11 cents. All right, exciting, right? Hold on to your enthusiasm. Let's look at the 5 days. Wow, the S&P's up 2% in the 5 days. So imagine if it did that every week for like 50 weeks straight. You'd be up like 100%. Good way to make money if you can do it. Doesn't seem like it really carries on. Other weeks you might be gaining money. Overall, we want to see how things are doing in the longer term. Over the 6 months, down 2%. Imagine you had $100. Now you're down to $98 or $98.20. In this case, it's down 1.98%. Okay, I wouldn't quite be panicking if it's down to $98. I wouldn't be thrilled about it, but hang in there. Let's see how it did over the last 1 year. Remember, I'm a long-term investor. I want to look at the 1 year performance. Oh my goodness, it's up about 22%, 21.98%. Compared to the Dow, which was 14.9%, this is almost 50% better. And you would have made on $100,000, you would have made close to $22,000 just by relaxing and watching the market and keeping your money in an ETF following the S&P 500. Whoa! Wouldn't that be awesome? Let's go ahead and take a look at the next index. Nasdaq is the second largest exchange in the United States next to the New York Stock Exchange. And the Nasdaq 100 is something special. It's 100 of the largest companies in the United States, but excluding the financial companies, we say it tends to have more of a tech flavor. I can taste those chips. Silicon, my favorite. No, just joking. Hold back on the salt. Don't eat too many chips in one sitting. Okay, if you can resist. Let's take a look at the Nasdaq 100. How did it do in the last day? It matched the S&P 500, up 0.11%. All right, so if you had $100, now you've got an extra $1.10 in your pocket. Don't go spending it all in one place. Let's look at the 5 days. Ooh, it's up 2.48%. Well, just imagine if the market did that for 50 weeks straight, you'd be like 125% of your money. So if you had $100,000 in there, you would have made $125,000. Well, the markets don't usually act that way in the long term, but in the short term, this has been a very good week to be in the market. Gosh, the 1 month has been down 2.73%. Went back a week, it would have been down a lot more, right? But we had a positive week, so it kind of spun things up. So 2.73% down. That means if you had $100, you're down 2.73%. You would have lost about $2.73. I wouldn't quite be freaking out, but I wouldn't be like super happy either. Over the 6 month, it's kind of almost the same as the 1 month. It's down $2.99. Yeah, sounds like a price that you'd see in a store, right? Okay, anyway, I wouldn't quite be super worried if I was down from $100 to $97.01, but that's basically what would have happened if you were in there for the 6 months. Okay, does it get any worse? Well, we're going to take a look at the 1 year. The last 1 year, just by keeping it in the Nasdaq 100, you made $29,830, 29.8% on 100K. Hey, not a bad way to make money because you like to see it going up, maybe even going down. So remember, this is not investment advice for you personally. If you do want personal financial advice, feel free to get in contact with me. I'd be happy to help you out. But I recommend that you do find a professional to help you or get to the point where you feel comfortable doing it yourself. There's no right or wrong answer for any one person, but a lot of times it does help to have a professional guiding you. Okay, well, I hope you enjoyed today's episode of the Yoga of Investment. Thanks for joining me, and I hope that you've had a good week in the market, as many people have in the indexes. Take care. Have a wonderful rest of your week. Looking forward to seeing you in the next one.
Follow, message us, or scan the QR code on the screen to learn more.